Hey, what's up, guys? How you doing? It's Simz BWS. We're back again with another video. So today we're going to be looking at risk management and how you manage to lose trades all the time. Okay, so this is live trading right now. As I'm live trading GU, this is the position that I just got involved in. Okay, so you see, if you go back to our older videos, you're going to see the view of this trade and how we got involved in this market. Looking at this trade behind this one. I'm not going to talk about this. I'm not going to talk about how we got involved in this trade. This is going to be a short video on risk management and how you manage to lose all the trades that you enter, or how you manage to be part of a losing trade every time. Okay. Okay, so guys, without wasting much time, let's get into it. Oh, so the reason why I'm saying why you manage to lose trades all the time is because probably it's your RR and how you manage your trades. Okay, so how do I manage my trades? Okay, so this is, like I said, this is going to be a short video. I'm not going to make this video longer. I'm going to make this video short. Okay, so if you want to manage your trades and manage to win, to win trades even if the trades are losing. Okay, so what I mean by even if the trades are losing, okay, so as I'm looking at this position on GU, the price is ran for like, I mean, okay, the price is ran for like 43 pips. Okay, so there's there's this thing called partialing out. Okay, partialing out of the market. What does partialing out of the market and break even mean? Okay, so partialing out of the market means taking some of the profits and leaving some of your profits to run. Okay, so what I mean by that is, okay, so for example, like I entered trades off of this, what, off of this demand zone. I'm looking to take my profits here, to take about 20% of my trade off of this high. Why am I doing that? I'm doing that because just in case if price had to go against me, okay, say if price had to go against me, I would lose everything. I'll probably be stopped out. But because I identified that this high is a very, it's another place where I can take my profits. I would have taken my profits even if the price came down here and took me out. I would have been a winner on this trade. Okay, this is what I'm saying. Okay, this high again, that's where you can partial out of of the trades. Probably you can take another 20%. This high again, um this high again, you can partial out of the market. In this high again, you can also take partials out of the market. The reason why we take partials out of the market is because we don't know how long the trade is going to run. Even if I have a setup like this one where I'm expecting the price to come and take out this high to run for like 75 pips, of course I'm not going to hold the trade until it is 75 pips without taking any partials, without breaking even on the market. What I mean by breaking even is, for example, something like this. Okay, so if price broke this high, okay, so this was the high. Okay, I entered off of this, what, off of this demand zone, looking for price to come and liquidate, to take out this, what, this liquidity. So after price came out and take out this liquidity and took out this high, this where I took my first partials. I took my first 20%, and then I broke even. I broke even on this trade. The reason why we break even on trades is because even if the market comes back after running for like 43 pips like we saw on the video, if the price decides to comes back, okay, to do this and continue bearish, we don't have a problem with that. Why? Because we already took partials, we already took profits on the trade. Even if even if the trade reverses, it doesn't matter to us. Okay, so the reason why you guys manage to lose many trades that are even some of the trades are supposed to be winning trades, but you find a way to lose those trades is because you want to hold the whole 75 pips without taking any partials, without breaking even on the trade. Okay, so it's possible for market to just run something like this and then totally reverses. Okay, and then you find yourself losing on such a trade, but the price, you were like 30 pips to 35 pips in profits. Why didn't you take out those partials and save some of the profits to run until the end and break even on those profits? That trade would not be a loser. Okay, so how do you calculate how do you calculate your risk management? How do you know which low size are you going to use? And how do you know which is the right low size to use? How do you know where to partial out? How do you know when to break even? Okay, so that depends with you and your strategy. Okay, so the best points to partial out is the highs if you're like buying. Okay, so the highs that get liquidated, all of these highs are liquidity that I'm expecting for price to come and not to come and take out all this liquidity. I'm expecting for price to come and take out this liquidity. I'm expecting for price to come and take out this liquidity. So everything on this price is liquidity. Okay. So as I'm looking at this price right now, I just took out partials on this high. As we are speaking right now, I just took out partials on my phone. I just took out partials off of this demand zone. Why? Because the market can actually totally reverse off of this demand zone. We don't actually know what the market is going to do next. What we can actually do is anticipate. So this is why we anticipate that the market is going to liquidate this high. That's where we're going to take our profits. The market is going to liquidate this high. That's where we're going to take our profit. Same continuing to the upside. So if it happens that the market reverses, it's going to take us out at break even. Okay, so the highs and the lows of the market are usually best places to be taking your profit, or the demand zones or the supply areas are best places where you need to be taking your profits. Okay, so how do you calculate your risk management? Okay, so for example, let me fix this here on this trade right here. Our stop loss was about 8 point. Okay, so let's just say 9 pips. Okay, because um just okay, so let's just say 9 pips on our stop loss. Okay, and we have let's say a $1,000 account. So on a $1,000 account, how much do you usually want to risk? How much risk are you usually risking on your account? So usually I risk half of a half of 1%. Okay, so which is 0.05%. Okay, so how do I calculate way to how do I calculate my position sizing? Okay, so that's when I'm going to what to calculate how much 0.5% is to 1,000. Okay, let's say okay, let's just make it simple. Let's say you are risking 1% of your account. Okay, like this is normal. Usually many people risk 1% of their account. So let's say you are risking 1% of your account. What is 1% of what? Of 1,000? Let's find out. So 1% of 1,000 is like is it 10 bucks? I don't know. Somewhere there is yeah, but it's probably 10 bucks. So if say you are risking $10 a trade, and your stop loss is something like okay, so sorry about that. There's people from the community. Like I said on the other video, guys, if you want to be part of the community, just go on the description below and join our community on the WhatsApp or Telegram. Okay, so like I was saying, our stop loss is something like 9 pips. Okay, we want to risk $10. We want to risk $10 off of our $1,000 account. So how can we find out which right position size to use? Okay, so if you want to risk $10 on a 9 pip stop loss, how are we going to do that? Which low size are we going to use? Okay, so it's very simple. Our stop loss is 9 pips and we want to risk $10. So how many times how many pips do we need for price to make 10 to make 10 bucks? Okay, so if we used say 0.1 lot, 0.1 lot, which is something like $1 a pip, which is something like $1 a pip, 0.1, which is something like $1 a pip by 9 is going to be $9. Okay, so it's more of the same. So if you're risking like $9 on this trade, and you're using 0.10, okay, loads on this particular trade, targeting 75 pips. Okay, so how are you going to partial out on this trade? Okay, so if you see price that is come if you see price coming to this high, okay, you start to partial out. It depends. You want to take out 20%, depends you how you want to take out 30%. I'm not going to show you calculations for this, guys. It's something that you're going to work out on yourselves, okay? Because risk management differs with people with certain type of characteristics, okay? So let's say off of this high, you take out what? You take out 0.2, you leave 0.8, 0.08 running. Okay, on this high again, you take out what? 0.02, and then you leave 0.6 running. Okay, on this high again, probably now you've locked in your profits and you are now confident with the trade that is going to run. You can now take out what? 0.01 and leave 0.5 running, okay, until probably you want to see these highs get taken out. So for me, when I see these highs get taken out, I want to take out something like 0.03 of my trade and leave the 20% of the trade running until take profit. If it doesn't take profit, it doesn't matter, because I would have probably looked in on a low somewhere here or anywhere here. Even if the price comes back and takes me out, I'll be still at profit, okay? So this is how you take partials, guys. This is how you break even, okay? This is how you manage your trades, okay? Without wasting much time, like I said, this is going to be a short video. If you like this content, guys, may you please smash on the subscribe button, like, and smash on that notification bell, so that when I drop a video, because I drop videos almost every week, when I drop a video, you're going to be notified. Okay, thank you, guys. See you on the next video.